watching damn World Series of Poker. Some things are just more important than trading. Good morning, good afternoon, and good evening. We got Bitcoin. Old Mr. Supercuck. Endless rolls of duct tape Bitcoin has to duct tape you up and put you in the corner. Put a dunce hat on you if you are not careful. That's why we trade volatility, probability, and statistics. I have my probability chart up right now on the weekly. I do. I started a longer term projection with Laplace distribution. From, we had this top back here from the pullback, these big 2 weekly pullbacks there. Okay. You can see how the 99.7 plus distribution range, it pulled up right from it, went sideways, stabilized back up inside the 95.4% Laplace distribution range. All right. Literally opened up this new weekly candle above it, right? Nice little fake out to the downside. Whoop, pulled right back up, pump from there. Didn't quite make it back. Come up here and test this mean of returns here. But you can see every day, boy, these weekly on the weekly, all these weekly candles right here, boy, they were really testing the downside. This actually 95.4. Both these weeks right here tested the 95.4 Laplace distribution range. Finally, this is where I got the more recent projection from the 41K low. Popped up, finally got back up to the mean of this Laplace distribution projection. Now it is above it. This was probably expected, right? I mean, we got a weekly candle backfill happening right now. You can see. So where do we go from here? That's everybody's question, right? Well, what's Bitcoin going to do? Well, see, that's the thing. When you trade volatility, probability, and statistics, obviously you can have a higher time frame bias that's going to give you a good idea where your capital is going to be. Where's your capital going to be the best invested, right? Especially if you're scalping the delta. You really want to know that. You want to know how much to be exposed. Because if you're taking scalps with the higher time frame trend, obviously you can be a bit more exposed. It's those counter trend trades, in my opinion, where you don't want to overexpose yourself. Because a lot of times, chances are, you might have to get out of that position pretty quick. I mean, profit's profit, right? But you don't want to get overexposed when you're trading counter trend. And there might be a lot of people right now saying, well, the trend's down. I'm like, I tend to argue with that. If you go back to the last 2 halvings, the following year, after the halving, November and December, moon time. Both times, right? Now, can that change? Sure it could. But in my opinion, the rest of November, and is what's really funny, if you go back to the run up to here, let's do it real quick. I'll show you exactly what I'm talking about. There you are right there, you little booger. Let's bring you up a little bit. Okay, here was the run up to 20K, right? Look at the 30% pullback on the weekly. What was that? That was the week of November 6th, 2017. We just had this previous week pullback on pretty much the same week. Look at the rest of November and December, straight up to the all-time high, right? And remember, this is the following year after the halving, right? Was it 2012, 2016 were the halvings, and then 2020, right? We're the next year, 2021. Here we are again, back in November. We're on this week right here, November 13th, the week of November 13th. Obviously, it's a couple days after that, right? 2 days. So this is the week of November 15th. This is when it all started. Wouldn't surprise me at all. What's been going on? Been clearing leverage to both sides, to the top and to the bottom. Bitcoin has just been whoop, 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 whoop in this nice little range here, just confusing the shit out of people, especially if you're trading traditional TA. And there's people that are just, oh, I got to get in at the bottom, right? Or the bears are like, oh, I want to short the top. And it's like, in my opinion, and a lot of other people's opinion, that's not you better be careful. That's not how you want to approach this market. That's why we trade the way we do, so we don't get caught with our pants down. And if any of us ever, the thing is, a lot of people that really understand these charts, you're not going to get too many bad entries. If you do, you're immediately out of the damn thing. Just get out of the position, reevaluate what you're seeing, wait for the daily close, right? Look for the price action volatility ranges. See, is there some divergence on higher time frames that's literally trend changing divergence, right? That's what you really want to look for. And if you don't see that, you're going, what's the other kind of dip? You're looking for continuation divergence. And on higher time frames, that's what we're getting a lot of. That's what we're getting a lot of. So let's see here. You can see I've got a green horizontal up right here. Okay. That green horizontal on this weekly candle, I mean, it's a little bit, barely a little bit higher, but I've got it right on the second standard deviation normal distribution. It's at about 80,760. The vertical's at 80,800 approximately. But then you've literally got the 95.4% Laplace distribution range on the current weekly candle at 80,035. So the second standard deviation normal distribution and the 95.4% level to the top side are within $700 of each other. Where the downside, they're about 3K apart. You can see them down here. There's a big wide range right here, right? Wait, sorry, we're wrong ones. Right here, boom and boom. Oh, no, that's the first. Boom. Yeah, it's these two. 95.4 Laplace, second standard deviation right there. Big, like 3. It's actually, I think, almost 4,000. But up here, they're right on top of each other. You can see, you can't even see the second standard deviation or the pink 95.4 Laplace. They're both right here underneath the 95.4% projection. That's another thing. That's why I have that horizontal right here. They're all crossing right here. From the 41K low projection on the weekly and the current weekly candle, the 95.4 Laplace distribution projection and current candle range are right on top of each other, right along with the second standard deviation. It won't surprise or shock me at all if you see Bitcoin up here by the end of the week. I mean, now we're talking, I mean, that's right now, what, $16,000 and a little bit of change move? Guys, I mean, you see big candles like this on a weekly all the time, right? You go back to that 20K, the run up to 20K, there was massive weeks, right? Massive weeks. But it's not like, especially in cryptocurrency, people that look at shit as fractals, they're squirrels. That's what I call them, right? They're fractal squirrels. They're out of their freaking mind. Volatility changes. As you move into the future, all the volatility is changing. That's why I'm always changing my projections. When I think they're not valid anymore, and that volatility has changed so much in a long-term data set where you can tell when these areas stop hitting. Like I've got this projection going on back here because in my opinion, it's still valid, right? And now this is a projection of the distribution, of Laplace distribution in general. This isn't a distribution of price action. This is the distribution of the returns, right? So the price action is above the mean of the projection of the returns from back here at this high where it was about 60K. Then we had those 2 weeks that just ripped to the downside. What percentage of a pullback was that? Let's check this real quick. Yeah, 50. That was that 50% pullback. Remember? I mean, 60K to 30K. Powerful damn move. Powerful. But this is why we use the distribution, right? This is the exact reason. Like, let's pull over here on the VRE. Look where I've got this projection started. I wait So we open up a new day. This is the new daily candle, or the first 15-minute candle right here. Remember, we had this little run up to the top side. Where did it reject from? First standard deviation on the 4-hour candle, on that current candle. It rejected from there. So once I got rid of this doji, we start the down move here. This is where I've got this projection on the 15-minute started, right? We go sideways. We go sideways. We go sideways. Now, if you look at the 68.3% Laplace distribution range, right? The mean, there's a lot of bias. This mean is really close to the downside. When you see something like that, this is usually what you get. I mean, these are just little tips and little secrets and things, right? That people learn over time. You little green booger, get out of here. Boop. So anyway, we tried to get up here. It was making a run at the 68.3, but because of this is telling me in this distribution, there's a lot of pressure to the downside. Especially you go sideways this long on a 15-minute, you're just like, This was a great little fake out, right? Coming down into this new 4-hour candle, it came down, candle closed right at the 68.3 4-hour Laplace distribution to the downside, bounced off there, fake out, boop, here we go. But from the projection, this is the 95.4 on this 15-minute projection. This is another thing I like to do. I like to use the distribution on this 15-minute chart. And I had a little discussion behind the scenes with somebody. If you're using this VRE and you're not using it on a 15-minute chart, and you don't have the daily standard deviations for normal distribution and the Laplace distribution daily levels on there, and each 4-hour of the same, you're missing the whole point of this indicator. 100%. This is the way to best utilize this. Okay, this is where you really know what's going on, especially if you use a projection on it too. And you can see what's going on right here, right? It's walking down, nailing that 95.4, right? It's got down below it a few times. It just keeps pulling back up. But on some low time frames, there's some bull div building. There's a bull div building on the returns oscillator on the 1-hour chart. I didn't check a bunch of them. We'll get into that other chart here in a minute. But this is the way to use this VRE, right? You want to have this on a 15-minute chart if you want to use it properly. Okay, let's expand this a little bit. There we go. Let me go to getting fucking goofies, getting spammed up again. Go to the stream chat. I don't think anybody's in here typing. Nope. All right. So we're going to get another bounce here, and we're about to find out. Or is it going to drop a little bit below? All right. This is testing to the downside. This blue cross line right here is the first standard deviation on the daily. All right. So price action's pretty much been also sucking up into there too. So by the end of the day, right, there's a 68.3% chance Bitcoin closes in that range, right? The top side 1SD is right there. There's a 68.3% chance Bitcoin closes its data set in between this range right here. There's also a 68.3% chance it closes in the Laplace distribution 68.3 range. Okay. Now, look at the new weekly range. It's a $100 range. So what does a tight range on the VRE mean? It means you're probably going to have a trending week. That could be a massive trend to the downside, turned around and go right back up to the upside. Thousands of dollars of price action. When you get a wide weekly, daily, or monthly range, it's literally telling you you're going to have a ranging time period, whatever you're looking at, daily, weekly, monthly, that it's going to range. But that range also could be pretty wide. But what it's telling you is you're probably going to range in the 68.3. But sometimes that 68.3 range is pretty wide. What's the top here? 67.5. Downside, yeah, I mean, it's about 4K, right? So you could just range back and forth in the 4K range all week. But this is telling me a trend, which usually on a weekly, I mean, you're going to get $12,000, $15,000, maybe sometimes even a little more of ranging price or of trending price action. But that doesn't mean it has to be a trend one way. It can be a trend to the downside and then flip around and turn right back up and trend the other way. You got to take all that price action into account. All that dollar amount to the downside, all to the top side. I mean, that's how you really want to look at price action. Let's see here. Check some. Yeah, everything's down, right? Everything's going to follow Bitcoin. You got Solana barely up. Maybe a couple things, some gaming tokens, but everything's right. Avalanche is up a little bit, but you got to understand that Bitcoin is going to rule this crypto universe. Probably always. There might be some things that are going to decouple, like gaming. I could see gaming probably decoupling, but then a lot of those pairs, they're paired with Bitcoin. So that's why a lot of people don't understand how crypto works. They look at the regular stock market and things get pumped. Then different things are doing different stuff. Well, when you have the trading pair is Bitcoin with everything, especially like people think that Ethereum's gonna like topple Bitcoin and do all this. People need to realize a lot of the liquidity in Ethereum, especially on some of this DeFi stuff, is like wrapped to Bitcoin. I mean, it's not going to happen. I don't care what anybody says. These ETH heads can think all they want that Ethereum's going to flip Bitcoin. Good luck. That's all I got to say. Good luck. The bigger chances are if Ethereum doesn't get their shit together, how many years have they been promising this 2.0 bullshit? It's a gas scam. I was talking to somebody about it earlier. The miners are banking this shit, right? And they're like, oh, well, it'll change. And it's like, yeah, well, not really. It doesn't have to because apparently people don't give a shit about paying these gas fees because they continue to enable this behavior, in my opinion. I don't understand why people. I will not buy an Ethereum token anymore. I just won't trade the shit. I won't buy any NFTs that are on Ethereum. It's not worth it to me. Not that, you can make a lot of money, but I don't want to be an enabler of this bullshit. And the more people that realize that this is literally bullshit, it's going to be better for the overall community in cryptocurrency. Make them make a change. Because as long as people keep buying this crap and paying these stupid ass gas fees, it's ridiculous, man. It is. It's ridiculous. That's what I'm a hater of. I'm a hater of this stupid ass gas fee crap. It's not like I don't want to invest in some of these projects, but I won't touch them. I won't touch them because of the gas. Some people might see that stupid. I don't. I just I've never been an enabler with anything. I'm not going to enable that crap to happen. Not on my watch. Not with my capital. No, thank you, sir. All right. Let's see here. But yeah, if they don't get their shit together, Solana or Cardano, they could flip Ethereum. That's what people don't realize. They continue this shit. Why would you want to develop on that platform knowing about this crap? Why wouldn't you just go develop on Solana or go develop on Cardano or go develop on Avalanche or whatever? Whatever your flavor is. It's crazy. It's crazy. Why the miners are just like, ha 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 ha. People are like, oh, well, they can make a change. And I'm like, yeah, well, the miners have to, if they have a hard fork to make a change or whatever, the miners have to go over to that fork, right? They don't have to. They can just continue to run their scam. But obviously, a lot of, people will probably go to the new protocol. We'll see what happens. It's just crazy at this point. Crazy. That they have not even, they just keep saying they're going to fix the problem, and I don't really see it. Prove me wrong. Prove me wrong. Prove me wrong. Fix your gas fee problem. I sold all my Ethereum. Yeah, I don't want to be a part of it. Pass on gas. Yeah, Yasha. Let me see here. Let's go to. Let's see what we're doing over here. A 4 hour. All right. Yeah, we're almost dropping back down to this high length log MA, this variance log MA on the 4 hour. You know, the move earlier that we did have, and we got up here. What was that at? Yeah, 60. What did it get up to? 66.4. Yeah, right there. That's the central power mean. Do these things hold credibility? Of course they do. This is why we build indicators based on this stuff, right? That's the central power mean. Then we've got the reverse Fisher. We've got the reverse wave trend, and I've got 4 variance log MAs that all have significance. They all play their part, especially when you set them up correctly. Let's go up onto a higher time frame here. Let's see what's going on in the 12-hour. Yeah, we're hitting the second variance log MA right here. There's the central power mean down at 60, little tick under 63. Got the reverse wave trend down here at about 62.4. Yeah, what's it at? Yep, 62.393. But then way down here, about 59.700-ish. That's a reverse Fisher. So let's see how this plays out. I mean, me personally, my bias is to the upside just because of the time period we're in, you know, and how it's always happened in Bitcoin. Now, it'd be a great little fake out. Well, let's just dump the crypto market and screw everybody. See, what does the central power mean on the daily? Central power means at 62.150. Yeah, 62.153. It is dropping below this top log MA up here. The other one's right there with the central power mean. Yeah, a little under 62. On the daily, though, this high length variance log MA, it is saying that I like the slope of everything too. I like the slope of everything. But the variance log MA being blue, that's telling you returns are above the mean and variance is still rising. This is why this is a great trend indicator for people, you know, that can't sit in front of the computer all day long and trade. They just want to get in. They just want to get in. And I found I was only using 2 of them. I found that using 4 of them, I'm seeing some good stuff. We're going to add a little smoothing to it too, make this a little smoother. It's probably going to give some better reads, which I put in some good numbers on the smoothing, like everything else. But right now, it's working really good. Let's pop over here onto the 5-day. Yeah, the 5-day actually is looking pretty good. Reverse wave trend just crossed up over the recently crossed up over the central power mean. All the log MAs are headed up. The mid length, yeah, the three higher lengths are all still variances above the mean. We're having a little indecision on the low length because these variance log MAs, they test 2 things like mean and variance. When the mean goes up 2 candles in a row and variance is up 1, down 1, that is that's when you get this indecision. So this is, and I can just tell the way Bitcoin's acting. This is one of those things, man, where, and you pop over here on the weekly, right? I mean, this is the biggest weekly close Bitcoin's ever had. So, I mean, it's perfect, right? Everybody's like, ah, woohoo. You know, on YouTube, people going crazy and shit. It's like, oh, these people, they just enter into longs. Oh, let's get in this long. Oh, they're already fucking screwed, right? Especially if they were over leveraged. You know, this thing damn near, it's almost a total candle backfill weekly. I wouldn't be a bit surprised to see at some point here, I see this thing launching right out of it again, right? Look at these weekly candles. So this will be interesting to see how this plays out. But as you know, volatility, probability, and statistics trader, we really don't care. I mean, obviously, long term, we want Bitcoin to go up, right? But we all know behind the scenes, there's a battle. Right? There is a battle. There's these bears. They're high on honey all the time. They're the people. They're like the Joker. They just want to see the world burn, which is insane to me. It's like everybody, man, just stop selling. But the supply shock, right? There's not a lot of Bitcoin. So people forget about. There's not a lot of Bitcoin. So it's not going to take much. Me and MJ talk about it all the time. You could wake up tomorrow and Bitcoin could be at $500,000, dude. Does everybody understand how this thing works? Right? If you just have what if you have all of a sudden a bunch of corporations are just like, I'm putting this amount, boom, boom, boom. We're going to put this on the balance sheet. This thing will fucking explode. And we're in the process. We're going to build our website up where we're going to have all of these on-chain metrics that I'll be able to go to our website and be able to discuss all this stuff, all the leverage, right? The funding, the global. I can't even think right now. I've got too much on my mind. But you know what I'm saying. There's another YouTuber out there that does the same thing. It's just good because it's
great.
Yeah. Open interest. But it's actionable intel, man. It really is. It's not like it's on-chain metrics. That stuff is important. But bottom line is there's not a lot of Bitcoin. there's not a lot of Bitcoin. When you consider that there are, I think at this point there's almost 60 million millionaires in the world. I think that's what it is at this point. For Christ's sakes, there's hardly any Bitcoin for sale. And hardly any of those people are even involved in it yet. What happens when they all catch wind and they're like, oh, what the hell? Bitcoin's got an ETF now. It's getting some legitimacy. It's always been legitimate, right? These people just have been denying it for so long. What if all of a sudden they're just like, well, I just want one Bitcoin. Do you have any idea what'll happen to the price? Oh my God. It'll be crazy. Because you think they're gonna buy one? If you're a multi-millionaire, are you just gonna go buy one Bitcoin at $63,000? Hell no, you're probably gonna put $1 million into it. You're probably gonna buy 10 at least. 10 or 20 or something. Oh my God, this price could just go bonkers. That's what we just don't ever know. And that's why we just trade the volatility. That's all you can do. Trade the volatility. Let's see this, how much different the 7-day is. Yeah, 7-day actually did have a higher. No, it was a little lower. 64.8. What was that weekly close? Yeah, it was about $600 more on the weekly. Is that the highest 5-day? It sure was. Highest 5-day too, a tick under 65. Yeah, those are about in the same area. 3-day. Yeah, 3-day too. 3-day was actually higher. Yeah, the highest 3-day close we've ever had. It was literally about 67.6. Powerful. Now you can see it's coming back, right? I mean, last 3-day candle, we literally opened up, came down, tested this log MA perfectly, sucked back up. Opened up, pumped a little bit, and right back down. This is just, I'm telling you, in there, clearing out people to both sides. And what does that usually tell you? Right? What's that usually tell you? What's going on? This thing's getting ready to move one way or the other. So, Bilbo, how do you know things are getting ready to move? Because Bilbo knows volatility. Look at these 3 lengths of the AVR. Look at these 2. Look at the highest length. Do people understand what this means? There's a move coming, a massive move coming. You pop up on the daily, it's flashing, right? You got the low length flashing, high length flashing. The mid length was flashing, but it's low. Hell, it's at a 32%. But hell, these 2 are 8%, 4%. Ranks real low on all of them. And for people that are confused about APP, this is not volatility. If anybody thought that this was volatility, this is percentage of price. The best way to use this indicator is to set these up on different lengths, right? Have a really high length, a really low length, and a mid length. And usually when you get up to a certain area and they're all peaking out, start what it just adds confluence to everything else. Right? Adds confluence. The hell is going on? I got a dog chewing a bone. Let's see here. But like on the daily right now, right? I mean, building hidden bear. I mean, hidden bull. Sorry, Jesus. Building hidden bull. Hidden bull divergence on, yeah, returns oscillator and log return Z score. You can see the variance starting to turn up, positively correlated. I like seeing that. The deviation bands are squeezing. We've got the AVZ. It's heading back up into positive correlation, right? It's right about here now, heading back up. And the Z score of historical volatility is turning back up. That's what you want to see. You want to see these move together, heading into positive correlation, and then the Z score heading back up towards the mean here. It's always beautiful. And of course, then we got the wonderful entropy indicator, which this thing is powerful as all get out. I mean, powerful. Once you learn how to use this thing, it's awesome. It's a great indicator. So it's daily entropy on the 12-day. That's another thing, right? This is just all random. Random. I mean, this 12-hour candle we're having right now, it doesn't get any more random, right? But when there's randomness, that's what's that telling you? It's random. It could go either direction. So, but also when you see something like that, it's usually the beginning of a move because it's not going to stay like that. It might stay random, it might stay pink, but it's not going to stay like that. I mean, that is like, you don't get any more random than when this thing flashes. So it doesn't stay like that long, and it's either going to just go into more randomness, or it's going to shoot into trend, one or the other. It's not just going to stay there. You'll never see that yellow flash for too long. But usually when you do get a yellow flash, all of a sudden, you'll have moves start, right? And then the correlation, when you get a flash on the correlation, it's telling you the correlation between entropy and price action, very low. There is a move. And when you get them both at the same time, it's like you need to get prepared, right? So the beginning of this little up move, right? It was free. It's all random. It's all random. And you don't see a real trending move until you get this little pullback. It's all random. And then boom, then entropy drops in the trend and we get a big 12-hour pump. Went up for like 2 days. Let me see here. Getting dinged. Yeah, I'll look at that when we're done. MJ, do I have these guys on your list? I don't know what you're talking about. Oh, there you go. You added another. No, I haven't even made the list yet either, buddy. You know me. I get lost in the charts. Between picking up dog shit and looking at freaking charts, I get lost. So 12-hour, do you like this stuff? God, man, you can see when you get in this random state, this thing's all over the place. Then trend, right? That's why this entropy indicator is powerful when you learn how to use it in confluence with everything else. Super powerful. Super. Go to the 8-hour. Me and MJ are going to make some nice, like 3 to 5 minute analysis videos across the board on a lot of things. Probably all the platforms, Avalanche, Cardano, Solana, all the good stuff. Yes, I'll throw some Ethereum in there too for all the ETH heads. But Matic,
Ripple.
the art or what is it? Yeah, that'll do Ripple. But there's a lot of Ripple heads out there. So you never know.
Doge.
Oh yeah, I'm gonna do Doge. Oh, we got a bunch of hits on that bad boy. Like there's every kook in the world out there ready for Doge videos to drop. Do a little update on the projection. Since we're cooking into November now. So the 8 hour, right? Entropy's heading up, or entropy, geez. The variance is heading up, negatively correlated, right? It's having an occurrence. So down we go. Let's see. But is what I look for is okay. Is it from div? Now, if you look here, yeah, it was. It was hidden bear on the 8 hour. There was not. Yeah, there was. There was hidden bear on Z-score log returns and the returns oscillator. All right. 4 hour, on the other hand, on the Z-score of log returns, there was definitely some bear div. But as far as the returns oscillator go, which I put a lot of weight on, none. No divergence. No divergence. But what is building from this back here, right? Hidden bull. Hidden bull. And this has just been the routine, right? These fucking traditional markets open up and they're trying to dump this off. Now, whether or not, who knows what the hell's going on? I wouldn't be a bit surprised if that Elon scammy Musk is selling off some of his Bitcoin. Who knows? That guy's a scam artist, if you guys haven't figured that out yet. Him and his green energy bullshit. Let me see here. Follows government subsidies, and it's a joke, in my opinion. It's a joke, especially the green energy app. Oh, buy my battery car. Oh, it's super good. But don't tell anybody about the manufacturing process of the batteries or how the energy is created in the first place to charge your little toaster cars. It's just such a joke. What are they doing? They're burning fossil fucking fuel. It's so funny. It'd be different if it was all nuclear plants or something, right? But most people don't even know how power plants work. It's just insanity how uninformed people are. So what are you gonna do, man? I'm just gonna sit in my box and trade cryptocurrency. Let's go back to, let's see here. Yeah, yeah, daily is prime. Let's take a peek here on the 2 hours. 2 hour bull div. That's how everything's heading back up though. And it's actually, yeah, no div. But at the same time, yeah, right here, 2 hour, definitely some bear div. Definitely bear div. 1 hour, I believe I was seeing multiples. Yeah, there. Here's where the bull div is on the 1 hour. Multiple stabberoonies too on both. Z-score log returns oscillator. You can see the variance right here where it was heading down, positively correlated. When the variance comes down, positively correlated, price action is going to continue to walk down. And then it goes negatively correlated coming down. We get these couple up. We get a couple candles back up to the upside. But now it's starting to head up negatively correlated. We get a pump here. It's going to probably turn blue on the outside, positively correlated. Maybe this dip plays out. There's also div on the DLP. That's what I didn't look at. Let me see this 4 hour. I'm pretty sure there was a lot. Yeah, from way back. Actually, no. Time frame was that on it? I was seeing that. What I like seeing though. There's no like bear div on the DLP on high time frames. Or, you can see right here, this pullback on the 12 hour. There's no bear div. It's not bear div at all. And this is that div I really give a shit about, to be honest. Same with the daily, right? High, lower high, high, lower high, high, lower high. I mean, it's not bear div that's bringing this down on the high time frames. To be honest, it's just this is all random. It's just all random. But volatility is crack-a-lacking. Contraction, major contraction. 2 day, not so much. 3 day, definitely. It's a 5-day flashing. 5-day, 981. It's at 5. Correlation's pretty low too. And this is actually, you can see, negatively correlated contracting, right? So we get these 5-day candle walk-ups. This usually ebb and flows into a massive pump. Yes, sir. It's what usually happens. Now, you get over to the DLP on the 5-day, though, and there is a little bit of bear div. And there's a little bit of bear div on the returns oscillator. But same time, look at the pink. You know, you got a pink histogram on this 5-day. Both of them, really. It's a little bitty pinky. I see a little tiny little pink histogram there. Let's blow it up. Yep, it's a little guy. Oh, look, little stubby. Cute. So that's what I look for, because that's telling you the correlation between the read you're getting on the returns oscillator, in between the returns oscillator and the price action. So there is not any bear div on the log returns. Yeah, it's just 90-minute looking like 90 minutes starting to flip around, going positively correlated, and there's definitely some bull div. You can see, I mean, this is a low right here. When you get a little crook like that, here's the low, higher low, low, lower low, bull div building, especially on Z-score log returns, no div on the DLP. You've got the correlation to the downside with the entropy decreasing, probably getting ready to start flashing here on the next close. And we're positively correlated, and historical volatility starting to turn back up. And that's what you actually want to see. APP, right? The percentile of price, they're all flipping back around. So we'll have to see what happens here. Bitcoin, typical Bitcoin. It's just how long too, man? This thing has been shaking people out left and right, and it just gets people not knowing what the hell's going on. And then you take like a 2-hour nap. You come back and Bitcoin pumped 10K or something stupid. This is how this thing does it, man. Right? They don't want capital T, capital H, capital E, capital Y, do not want you to make any money. They want to make all the money. Don't think they aren't invested in crypto, because they are. Oh shit. If they are the ones that move this market with their big algorithm trading.
They own most of the Bitcoin already.
Yeah, they already own most of the Bitcoin. While they, for years, have been going, Bitcoin's a scam, they have been buying it. Trust me. They got it. They got it. They're not stupid. They know the dollar's a worthless piece of shit. Oh boy, that's gonna be an interesting day. And that whole freaking scam goes down the tubes. You think your buying power for the dollar right now is bad? Just wait. Oh, I see traditional markets, they popped back up a little bit. They were down a little. Yeah, they came back up, stabilize.
Okay.
Crap
It's
too much.
only 20 years ago, before Chavez came
Yeah.
into Venezuela. Venezuela was the richest country in South America. And
Oh
then
yeah.
inflation.
Oh yeah. Yep. And then whoop, same thing. This crackhead that's supposedly the potato that's supposedly in charge. Yeah, it's so
The
stupid.
point is,
He ain't
the
gonna get
point is,
away
yeah,
with it now.
economics can change very quickly, and inflation can easily drive things very quickly in one direction.
Yeah. Yeah, we got some bull div on the 45. Yeah, multiple, just like the 1 hour, which makes sense, right? Pretty close. Boom, boom. I mean, there's a lot of stuff. Let's see here. Variance going sideways, negatively correlated. There's no bull div on the DLP. I mean, you got entropy is actually, I mean, you can see it's been in a trend right here. Trend here, randomness, went back into trend. It is starting to build, red candles, which is telling you a downside move. But, right here, when you see historical volatility Z-score go down like that and it's positively correlated, this price is just walking down. Now, if you see this turn back up, Z-source starts heading back up, positively correlated. We see a turn in 45 though. I mean, we've got two of these lengths on the price percentile way down here, way down. And I took the flashes out. I don't need the flashes. I got one eye at least that worked pretty well. So, I mean, it just makes more of a mess. I got enough flashing going on with the freaking ABRs, my entropy indicator. I don't need more flashes over here. I like my pure little percentile of price lines. Beautiful little buggers. Let's see. Can you show your Z-score length? Yeah, man, I change it all the time. I was Sayron earlier. I was on the Wolfsbane. I was changing it to all kinds at different levels: a 7, a 9, a 13, a 21, actually a 22, not a 21, a 33. I wanted to get different reads on different time frames. I don't even know what it's set at, to be honest. Yeah, it's at a 9 right now. It's at a 9 right now. And if you put it on, like you throw it on a 33, boom, 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 boom. So there is no bull div, right? You go on a lower length though, there is bull div. So I just mess around and I change it all the times. It's not that the lower ones work better. It's just like when I'll drop down through time frames looking at things. I can sit on one time frame and just go through different lengths to try to get an idea of what's really going on, to see, okay, how many of these time frames of these lengths is there actually did? Because everybody knows how that works, right? You're just going back that many candles. Right now, it's all this information is being populated 33 candles in forward, right? So I want to see exactly what's going on. You put this on a low, you put this on like an 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, which is perfect. Right when it was going into trend. Let's see. There is bull div, and a lot. So this is why I change stuff like that. Especially that's always a good idea. And then I'm just, like every stream. I mean, this is shit I usually don't talk about, but it's like this is a good way. So you look at the entropy. You look when it's in trend. When you get these healthy moves, change your length for the all of the candles for that look back while price action was in trend, and see if there's divergence. Because you put it on a 30, that's going, I mean, all the way back, right? Hell, I don't even know how far. Let's see how far back a 30 read will go. Yeah, yeah, right up there, all across. So it's showing more of a gradual, right? Hell, it was heading down the whole time. But if you just do it during this trend, there's a lot of bull div. There is a lot of bull div. So that's another thing I will do. Because remember what I said, it's like if you want to see if there is a divergence that is valid, just look at the price action that's interesting you, right? Like I could even go back so this whole move started on the 45. So that's 14. Let's change this baby to a 14. This whole down move. Nothing but bull div. This whole move down is just so. And what is divergence telling you in the first place? Right? We all know that it's an imbalance in buy and sell pressure. That's what creates a divergence to begin with. It's like the bears have just been like, here we come. Oh, and the bulls are like, okay, bring it. We're just going to sit here. We're going to store our reserves up. This divergence is going to build, and then we're going to jump out of the hole, and they just slam it right back on them. That's why the imbalance in buy and sell pressure and the divergence that's created by it, this is what moves the whole market. And it's these big ass algos battling each other that do it, right? I mean, they're not stupid. When one of the other sides is like, rah, show their fucking teeth, these algos, if they were in a position, they're out. They just let them have their way. And that just creates a major imbalance. Major imbalance. The market's not going to stand for that. It has to correct itself. And when you're talking about returns, their returns will always mean revert. This is where people in traditional TA, they're so lost, they don't understand. They don't even know what a fucking return is, right? That's what's horrible. It's like, holy shit. When I first heard,
Exactly. Yeah.
yeah, when I first heard some certain individual talking about returns, I wanted to know what the hell he was talking about. He was a little fucking kooky for my taste, but he seemed to know what he was talking about. So I started researching and researching and researching. What the hell? Hello. How do I not know about this? Well, you're not going to know about it. It's not like this is the kind of shit they teach retail traders. They teach retail traders traditional technical analysis, right?
Yeah.
They don't teach you what you really need to know. That's really the bad thing about it. But
Yeah,
it makes
even
sense, right?
last thing, it's never the thing they promote. It's always the thing that's just, oh, by the way, there's this thing, and then they just skip to the next.
Oh yeah. As we travel down through the time for 250 already, I just been gabbing. Yeah, the
August.
half hour definitely got some div too. Lots of divergence. And yeah, half hour APPs down here buried. But I saw somebody talking about, oh, well, it's, the volatility on the APP, it's totally contracted or it's totally expanded. This is not volatility. This is percentile of price. And that's the only way to use this is to have three lengths. You want to see them all top out or bottom at the same time. And then okay. And this is the closest thing. This is the closest thing to traditional TA. That's why I don't use it too much. But what is this telling you? That shit's oversold, which is a total crock of shit in a random market. But this is what the hell this is telling you. When you get these three different lengths, especially I've got a really high length one. I don't even know what it's set on, to be honest, like 144 or something. When you get them all topping out or bottoming out, that's what this indicator is telling you. Hey man, they're all three of these lengths. Boy, the percentile of price is super high. Chances are this thing's going to bleed out a little bit and probably go all the way to the other side, which it does a lot of the times.
That's exactly right, and it has to be read in confluence with, or in concert with the volatility indicators.
Yep,
because
exactly.
If you read it just alone by itself, boy, you stand a pretty good chance of getting wrecked.
Wrecked, because it can stay down here forever.
Yeah.
It can stay down here or up here for a long time. But if you're way down here, and here's how to trade it. My little buddy MJ, he understands this. When you get all these to the downside and you've got volatility contraction happening, especially like on the low, even on the low length, you've got volatility contraction. Then you look over here and there's a bunch of bold div. Hello.
Yeah.
It's kind of a no-brainer. At some point, it's going to pop. It's going to pop because of the imbalance in the buy and sell pressure.
Yeah, so it's very good. It's very, very good at nailing really good entry to the top side and the bottom side. It really is.
But that's why using all this together. I'm talking about, and that's why people Most people, you show these charts to somebody over in TA land, they're like, you ever heard of what do they call it? The paralysis. Analysis paralysis, man. You can't be a good trader. What they don't realize is I'm looking at this whole damn chart, and that whole damn chart, and that whole damn chart, and that whole damn chart. And then they really think you're whacked. But then they finally, at some point, they realize, God, man, I wonder if that's the other guy that's been on the other side of my seven out of 10 losing trades. I wonder if that's the guy. Be like, no, actually, I was on the other side of your 9 losing trades, my friend. Oh, shit.
Yeah. Someone's got to lose to us, man.
Somebody has to be the loser. That's what trading's all about. It's not like when you win, there's like the tooth fairies on the other side of your trade. Oh, here you go. I need a tooth, but we'll give you this winning trade. There's some joker over there, or some joker ass using some silly ass freaking edge. He thinks he has an edge. If you ever hear anybody coming from that realm and they say they've got an edge, tell them you want to see their P&L.
Exactly.
Let me see your P&L. And I've seen people post P&Ls where it's like 30, 40%, and they think they're winning. And it's like,
ask them what their actual mathematical edge percentage is. That was alone.
Then I crush their whole life and be like, you know what that edge is, right? They're like, what? I'm like, it's an edge of a cliff. Just jump off of it. Do yourself a favor. And your bank account. But then you ask them, how many times have you withdrawn money from the exchange?
Yeah.
How many times have you literally withdrawn money from the exchange and put it into your bank account? And they're just like, oh, it's like, yeah, you're continually making deposits, because you just keep wrecking account after account after account. But they're like, they don't see the forest because of the trees, where in that time of them wrecking their account, maybe they had 2 good trades, but they just wreck, then they lose it all. They're either over leveraged, something, doing something stupid. And so they get hooked. No, it's good. I just got to figure out a way to make that a winner all the time. And then they have one good winning trade. And
they'd be better off just throwing darts at a board.
Yep. It's like a bunch of monkeys. Just like a bunch of monkeys. You all be washing potatoes on different islands at the same time. Oh, look, we all learned this together. This is fantastic.
What people do, exactly what you said with the over leverage. I mean, it is insane the kind of risks people take with their money. They take 20x, 50x, 100x. Like, what are you doing? You're begging to get wrecked like that. You're begging for it, especially when you don't know what you're doing. Especially.
Oh yeah, and it's the euphoria. It's the euphoria when you get a daily move like this.
Yeah.
They don't take their profit. We get 1 day pullback. They add on. They don't take their profit. 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 They add on. Now they're like 80, 90% over leverage. Liquidated. On a little move like that. Liquidated. Yeah. After you don't take profit this whole time. And then, whoop, you get a 2 day pullback. Or here. Right? They add on here and give 100. They're just wrecked. This is like a common mistake a lot of people do because they're emotionally attached to their trade. This shit's going to the moon. Yeah. It's never stopping. Jim Joe on YouTube said we're going to 100K next week. Holy shit, this is incredible.
It's also this ridiculous idea of watching your percentage grow and grow and grow on one trade rather than taking many little trades at smaller percentage gains that they're all gains and you stack up the gains and you end up with real profits over time versus some fluffy number that doesn't mean anything until you close the trade.
Fluffy number. Yeah, it's crazy. Crazy. Boom, boom. All right, what time is it? Yeah, it's time to wrap it up. Holy shit. Yeah, went on a rampage today. Never even got off Bitcoin. It usually happens. It's all good. Me and MJ are going to throw together some nice little short analysis vids for all our fans out there. Build up these YouTube numbers. And that's another thing, right? This is what we do. There's like such a small percentage of people that even understand what a fucking return is or a z-score, right? Or variance or anything.
Yeah.
So it's like fighting an uphill battle, but that's not what we're doing. We're fighting. If you find your way, if you're watching this on YouTube for the first time and you find your way over to our Discord, you're meant to be here and we'll embrace you open arms. Come on in. Read the welcome message. The description to our link to our Discords in the description of the videos. All right. Just follow the welcome message. It'll tell you exactly what to do. We got a lot of people. They come in and they just sit there like bumps on a log, which is fine. You can just hang out in the waiting room and stare at each other, talk about whatever you guys talk about when you're hanging out, not looking at the full Discord. And then people are shocked once they come in. They're like, oh, wow, there's a lot of stuff in this Discord. Yeah, and it's compiling every day. We're always adding some sort of education. I'm always searching like Khan Academy for some good mathematical stuff so people have something to watch because these guys, and I've just posted one. Read all the comments in there. They're like, oh my God, I just took a whole semester fucking statistical class and you cleared this whole thing up for me in fucking a half hour. I'm like, that's how these vids are, man. These professors and shit that teach us crap, they're as clueless as the fucking students trying to learn it. It's like, but then you go to something like Khan Academy and boom, man, these guys are on top of shit. They actually put it together in a way where you can actually learn, which is what we all want. So we're continually compiling stuff in our compiling educational material for everybody to read through. And then, it's just great hanging out with everybody and learning together, right? Right now, it's a nice tight little group of traders and there are people really starting to get a hang of it. And then they will rub off on somebody and then they'll come to the Discord and then they'll figure it out. That's how you gain traction in a community of traders where 99.9999%, it's like the 15th coin flip percentage of traders that they all trade traditional TA and they probably always will. They probably always will. But that 0.0000001% will make their way over to volatility trading and they'll start to use volatility, probability, and statistics to trade. But most people look at these charts and their eyes roll in the back of their head and they're just like hogwash. It's like, okay, whatever. Secret. We need people on the other side of our trade, so we really don't give a flying shit if you do it or not. That should be like a huge flag for people. Go.
We're not
I've heard
actually
him say that several
Yeah.
times. Maybe they're onto something over there. It's like, yeah, we are onto something over there, you knuckleheads. But we're gonna wrap it up. And thanks, guys, for watching live in the Discord. We're going to be publishing some new indicators here coming up. Specifically, this bad boy right here. We're working out the kinks and stuff. I mean, this isn't easy stuff to do. And these guys actually that are doing this, they have lives. They're not like Bilbo sits in front of his computer 24 hours a day and just walks his dogs. If it wasn't for my dogs, I would need an intervention for sure. I'd probably be surrounded by about 30 cats, about 500 pizza boxes and empty 2-liter bottles. It'd be horrible. Thank God for my dogs. That being said, wherever you live at in this beautiful realm in the metaverse, apparently, I guess that's where we're at. We're in the metaverse, the simulation. Have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow, 2 p.m. Pacific Standard Time. See you guys.